You were listening to chartingwealth.com for Tuesday, the 26th of December, 2017. Yes, the market is closed Christmas Day, but open the day after. We're, of course, recording this for you as we always do for our comprehensive review and forecast on a Friday at the close of the market. What do we see going on? The S&P 500 down just barely at 0.03% for the day on Friday. The NASDAQ down a little more, 0.11%. And of course, the TLT, that's a 20-year bond, as it should be most of the time, is the inverse of what's going on in the stock market. It was up for the day, 0.14%. Gold was up 0.5%, a little over at 0.52%. Let's jump into the S&P 500 first on the weekly chart. Remember, we had our weekly vertical crossover all the way back on Friday, the 29th of September. And of course, when we talk about the weekly chart, every date we give you is a Friday, because at the close of business on a Friday, that's when, of course, that candle is set. You don't call a candle until it's fully drawn. Now, what do we see going on over the last 5 weeks? We see nice, solid up movement on the S&P 500. In fact, since we had that weekly vertical crossover and the market opened, well, the jumping in point for us was somewhere around 250. We have seen the market shoot up for 6 weeks in a row. A little bit of a pullback, sort of a doji where the market was digesting those gains. Indecision on 1 week ending the 17th of November. And then up for the last 5 weeks. Derivative oscillator gained a little bit over the week. Price percent oscillator continuing to move up. So that is nice and beautiful when it comes to the weekly chart. Now, what do we see on the 2-day chart? Well, it crossed over going up back on the 29th of November, and it went up for 3 2-day candles, then sort of a pullback, the 2-day candle ending on the 7th, up 2 more candles, bit of a pullback for the 2-day candle ending on the 15th. These are all December dates. And then the last 2 candles, and again, it's just the first day of the latest 2-day candle, really sideways sliding since the market topped there on Tuesday, the 2-day candle ending on Tuesday, it's somewhere around 268.60. So we do see the derivative oscillator has been losing energy since that topping, and we also see the price percent oscillator is heading down toward the red signal line. Remember, the price percent oscillator is our master indicator, and we still have price movement above the 2-day, well above the weekly. As we delve into the 4-hour chart, it crossed over going down back on the morning of Tuesday the 19th, and what it's really been doing is sliding sideways since that time and closed at somewhere around 267.29, something like that. So again, we do see the derivative oscillator gaining downward momentum and the price percent oscillator continuing to move down, but again, everything's really been sliding sideways. So take that as you will. Continue to keep an eye on over the next week. If there is a nice crossing over going up on that 4-hour chart, then by all means, if you've not already been in and stayed in, you might look to get in. And again, we know price is getting long in the tooth there, but as long as the 2-day chart and the weekly chart are in an uptrend, if you have a crossover going up on that 4-hour chart, by all means, jump in there and do a practice trade. Now let's look at what's going on the Qs. We've had 2 weeks of up movement after 2 weeks of sideways sliding. And of course, the week ended totally up for the entire week. The day on Friday was down just a little bit on the NASDAQ 100. We see the derivative oscillator continuing to lose downward momentum and continuing to lose momentum. And we see that the price percent oscillator is flat, moving sideways on the weekly chart. So again, keep that in mind as we go into this next week. What have we seen happen with this sideways slide? Well, remember, price percent oscillator really doesn't work if things are not oscillating. That means things aren't moving up or down. When they sort of slide sideways, it gets real squirrely, and what it's been doing is pretty much crossing and recrossing itself. So it is when we look at the derivative oscillator, it is up. Price percent oscillator looks like it's crossed over going down, but we can't call that yet because the candle's not drawn. So again, things topped out back when we had the 2-day crossover going up on the 19th, and now they've sort of slid sideways and gotten a little messy. So if you're drawing your arrows on your weekly market worksheet, just draw it sideways as far as the price percent oscillator goes. Now, what do we see going on the 4-hour chart? 4-hour chart crossed over going down in the afternoon on Thursday the 21st. And again, sideways sliding. It did end up penetrating at one point the 2-day and then sort of moved above it to close. So again, no strong downward momentum at this point. Things seem to be going sideways. So again, keep your eye on the prize. Do remember that that weekly chart has nice up movement over the course of the last week price-wise, but a little concern about the price percent oscillator going sideways and derivative oscillator losing energy. So just keep your eye on things. Again, if you've got a nice crossover going up strong on that 4-hour chart, it is probably going to pull the 2-day chart over with it and might give you a nice jumping in point over the course of the next week. Just keep an eye on it. Back to the weekly, going through our last 2 charts, TLT 20-year bond. Of course, it crossed over going up back on the week ending the 1st of December, up for the prior 2 weeks nicely. This last week, a lot of down movement. Most of it recovered, still a down candle, not a spinning top, and not a doji. So again, some strong down movement over the course of the week, enough to really pull that price percent oscillator down. However, it did not. We thought it might cross over going down. It didn't. So let's wait and see. Maybe it bounces off over the course of the next week and you might have a good jumping in point. Still technically up. Derivative oscillator losing energy. As we take a look at the 2-day chart, what do we see? Well, of course, that 2-day chart did cross over going down on the 21st. The 2-day candle then, a big strong down candle. But so far, the first day of the latest 2-day candle is a green up candle. So keep your eye on things. If things do cross over on that 2-day chart, it might give you a good jumping in point. Don't know that it'll happen over the course of the next week, but just keep watching. If things keep going down, then of course there may be a weekly vertical crossover going down that might give you an opportunity the following week. What's going on in the 4-hour chart? Looks like things are just flattening. Looks like things have bottomed out somewhere around 124.28. The derivative oscillator is pretty much losing downward momentum, and the price percent oscillator is about flat. So we'll continue to watch TLT, see if there are any opportunities over the course of the next week. Lastly, we go to gold. Gold up the most for the day, 0.52%. Remember, the prior 2 weeks had been strong down movement in gold. This last week is a green open box candle, and with a decent wick on top, a little bit bigger than the box itself, and it looks like a little wick on the bottom, about half the size of that. The price percent oscillator has gone flat on the weekly chart. Derivative oscillators losing downward momentum. So again, still in a confirmed down move on the weekly. So keep that in mind. That is still the big chart. That's what that's showing us. Now, what's going on the 2-day? It is crossed over going up after 3.5 2-day candles. Derivative oscillator still negative. And again, when I say it's crossed over, we can't call that yet. That's a little premature till that candle closes. There's a big down day on Tuesday, the 26th. I may have said Monday earlier because I'm so used to saying it. Markets, of course, closed on Christmas Day, opens Tuesday. But if there's a big down day on Tuesday, then that could pull the price percent oscillator back over to the negative. So can't call it yet, but we'll be watching just to see what happens. Why is all that up movement taking place and blowing through not only the 2-day, but now the weekly trend line? Well, the reason for that is, of course, seen on the 4-hour chart. We had it crossover going up all the way back on the afternoon of Wednesday the 13th. And my friends, if you were still relying on that chart as a total trading chart, it started working again quite nicely for you. And again, the thing to keep in mind is when the market gets squirrely in gold and starts going sideways, the price percent oscillator is much harder to use as it was there in about the middle of November. But boy, once it starts working nicely, as it did when things started turning down in late November and then turning up in mid-December, it has been beautiful, just gorgeous. So again, riding nicely. We've seen in the past that the 4-hour chart over the last several years has stopped working in mid-December. Well, it didn't this year. So we'll continue to see. We still are in sort of the danger zone going into January. We'll keep you posted if it stops working then. But so far, looking quite pretty. Folks, that's where we are as we end the day. Remember, we're going to be continuing to provide you throughout the time that the market is open, all the way through and into the new year. Market will, of course, is always closed on big holidays. But what do we have coming up that's really important for you? Those of you who are interested in long-term investing and learning how to do that, we again really encourage you, if you're not already signed up for and receiving our daily market podcast, you have to be a subscriber. It's for free at chartingwealth.com. We're going to share with you where we are on the quarterly chart and we'll also give you copies of the quarterly chart so you have that. But I'm telling you, the quarterly chart is amazing. Going back 20 years, it would have gotten you into the big rises in the market and gotten you out of the big drops on the S&P 500. Absolutely beautiful. We see the Trump effect going on right now as markets continue to soar, and we'll totally brief you on all of that at the end of the month, at the end of December, as we go into January and start our new year with our latest quarter review. God bless, my friends. Merry Christmas to all. We look forward to, again, spending this next year with you, helping you understand how the markets work, how to read charts, and, of course, how to become a charting master. God bless. All the best from the entire team here at Charting Wealth World Headquarters.